This video is literally one of the most important videos that you can watch. It will, without a doubt, if you watch it from front to back, give you the highest conviction that one could possibly have in the future path of Bitcoin and its path to mass adoption. And you guys know what that means. That means capital rotation from Bitcoin's pump to major caps to small caps and ultimately to altcoin season where we make life-changing gains. And that's what we're all about here on this channel, guys, is to teach you guys how to play the markets to make life-changing gains. In this video, I sit down with James Seyffart from Bloomberg Intelligence, and we go into all the questions that you might want answers to give you the most clarity on the next month ahead of us and Bitcoin's path to mass adoption. All right, guys, if you're excited for this video, like the video, subscribe to the channel if you're not already, and make sure that you guys share this video with everybody that you care about because they need to hear about this. They need to hear about Bitcoin. Everybody that you care about should have at least the basic knowledge, and it's our responsibility to at least try to educate those around us who haven't been orange pilled yet into Bitcoin, to at least give them the knowledge so they understand what is about to happen in the very, very near future. All right, guys, this is a great interview. You don't want to miss it. Enjoy. Welcome, buddy. How's it going?
Good. How are you doing?
Yeah, very, very good, man. Okay, so I think that I'm very excited for this because, I've been waiting for this day. Well, these times potentially, assuming that everything goes according to what we're all kind of expecting. But I was very, very early into Bitcoin as 2012, and I thought that mainstream adoption would come much sooner than it actually did. And I think that when you look at this bell adoption curve of a new technology, people I think are getting a bit wrong on how far along we are. I think that this ETF potentially, if it passes, would be the first kind of early majority of adoption of Bitcoin on like a massive level. Of course, you have like some percentage of the world who hasn't adopted Bitcoin, but this is real volume, real adoption. Maybe you could speak a little bit on what your theories are from an analyst perspective about the adoption of Bitcoin and how this is going to change that landscape.
Yeah, so a lot of people like to equate this to when we got a gold ETF, which honestly I think Bitcoin here is a little bit further along as far as the gold ETF story, right? So the thing with Bitcoin is the one thing I'd push back a little bit on what you're saying, but I do broadly agree, and I'll get into why I agree. But also, like, if somebody really wanted access to this thing, it's not like it was hard to get access. Like, you could have
Right.
downloaded anything. You could have gone to any website, as sketchy as they come, some that didn't look sketchy and turned out to be sketchy, like FTX. Anyone and their mother could have
Yeah.
downloaded a Coinbase account. I know plenty of people who I would be was shocked to learn that they are actually owned it already. So it's not like completely democratizing like gold ETFs did. For the most part, if you wanted to access gold, the only way to do it was, going to like a pawn shop or like some gold seller on the corner in your street and buying coins, right? So what the gold ETF did is it democratized the ability to do that in an investment portfolio. You can make the argument that people could kind of do that already, but it's very similar in the sense that what this is going to do, right? It's going to open investments to the investment advisor community. I know you have a global audience, but in the U.S., for the most part, some of the biggest controllers of assets are advisors and brokers and people at these wirehouses. And right now, they're not doing anything with Bitcoin for the most part. Yes, there's all these things out there. There's OnRamp. There's some other platforms where if these advisors really were like early on, like as early as you were potentially, and were like, I think my client should have a couple of percentage points in these things, they could have set up these third-party processes where they're like partnering in with these different platforms to get exposure, and maybe they're holding their own cold wallets. But like for the most part, most advisors don't want to deal with that, particularly because like if I'm putting 3% of my client assets in this, do I really want to spend like 60 hours doing due diligence and setting up these processes just to put a couple of percentage points in there? We know there are some advisors that did that. We know that the vast majority of advisors and brokers were just like, no, we're not going to bother. We're not going to deal with this. So what the ETF does is it puts it on the traditional financial rails. So one, it makes it easier to buy it. That's quintessential. Anyone with a brokerage account, pretty much everyone and their mother probably has a sort of brokerage account, an IRA, things like that. So it puts it on the traditional financial rails. The other thing that putting on the traditional financial rails does is it aligns incentives with these advisors and brokers. So for the most part, advisors and brokers, like they're offering a services and they make money, right? And for most advisors, they charge like an AUM fee. So if you have $1 million with them, they're going to charge you 1% a year or something percent a year for the assets that they're controlling for you. for the most part, a lot of them already have clients that have access to this stuff, and it's not under that umbrella where they're charging fees, so they're not giving recommendations. So once these things come out like a year down the line, you're going to see them like, oh, you have exposure to Bitcoin, give it to me, I'll help rebalance it, so we'll sell when it goes up, and we'll keep your allocation around 3%, 5%, whatever they end up deciding, and they could charge fees on having this ETF under their umbrella. Same with the brokers who can charge commissions for doing different things. So like basically the incentives begin to align for people to start allocating. Now, the one thing I will say is I don't think it's going to be this blow off, like tons of money are going to pour in immediately. I do think there'll be a lot of interest right off the bat in the early weeks, but there's a lot of huge numbers out there that people are talking about. It's more the long-term impact of, one, the SEC okaying this and just giving a little bit of regulatory clarity here, potentially. Obviously, there's still a chance they could deny. And then it's going to take time. Like those RAAs, those brokers I was talking about, some of these wirehouses that are at the big banks, like they go through this long compliance due diligence process to be like, how is this fund operating? What's the performance look like? What are the fees, and who's holding all the assets here? So that's going to take a long time before a lot of these big places can actually, even if the people that work there want to allocate for their clients, they're not going to be allowed to without going through a bunch of hoops and hurdles to get access. So there's going to be time once these things are trading and active and operating efficiently before we get some of that money that opens up that would consider allocating.
Yeah, and let's speak to the why now? Why now? We know that the Winklevoss brothers tried to do an ETF like 10 years ago, right? And what is it about now that feels different than before?
So I'll be honest with you. I thought things were ready to go in 2021, 2020. We were writing that we didn't really think they had good reason. We didn't like the reasonings they were giving in 2018-ish, 2019 time range for denying. But there was some stuff. There was a lot of like sketchy stuff that was going on in the markets. It did look like there was some manipulation. So like I wasn't as forceful. But some of the denials that came out in 21 and 22 just made zero sense. And particularly after, so the real reason that it's happening now is because of the Grayscale lawsuit, and BlackRock has entered the race. Coinbase has come on for a surveillance sharing agreement, which we can get into if you want. But the real thing here is, like, honestly, like for all your listeners, the person we can thank most for probably getting these spot ETFs is Gary himself. Gary gave a speech in July of 2021. August 3rd of 2021. And basically it's this long speech, and then he gets to 2 paragraphs and he starts talking about Bitcoin applications. And there was a bunch of Bitcoin futures applications, and there's 2 ways to apply for futures ETFs. One way is under the same process that spot Bitcoin ETFs go through, and another process is they basically can classify themselves as something called the 1940 Act fund. The process is a little different, but Gary basically says in the speech, like, we look forward to applications for Bitcoin futures ETFs under the 1940 Act with the protections of the 1940 Act, something. And then the next day, ProShares filed for Bitcoin futures ETFs under the 1940 Act. A bunch of other people followed in the days after. And that's when we were like, oh, wow, this is actually going to happen. So we were early. That's when people started paying attention to Eric and I, honestly, when we called that this futures ETF was going to get approved, and everyone else was telling us we were insane for saying that in August of 2021. So basically that approval, the denials that came after those launched, and a letter that basically approved one of those ETFs under the same process. So basically the SEC had to approve a futures ETF under the same process. It's called the 19B4 that spot ETFs have to go through. And that letter is what Grayscale used to decimate the SEC in court in their court filing. So the courts basically said you can't be allowing Bitcoin futures ETFs, which are a derivative of the spot market, and then not allowing spot ETFs. So really, as far as I'm concerned, that's the thing that's truly backed Gensler and the SEC into a corner here, and why they're likely going to approve. There's a host of other reasons. Basically, there was a whole list of all these things that need to happen before spot Bitcoin ETF could occur. Dahlia Blass wrote it. BlackRock ultimately hired her. Fun fact. So when she was at the SEC, she wrote it. And the issuers, Van Eck, Valkyrie, you name it, all of them, Invesco, have been chipping away little by little. They get these denial letters, then they submit new applications, and they fix, like, there's 20 issues, and then there's 15, and then there's 12, and then there's 7, and then basically the most recent ones that Grayscale has fought and won, they had no real reason. We can get into the nuance there. I don't think we really have to at this point. I've talked about it a ton. So there's different areas where people can access that, but it's really the lawsuit, and the SEC kind of like ran out of rope, right? They can't do this anymore.
I saw this I forget who it was that made this comment about the Grayscale playing a game of chess. Was it using the 1940 and 1933 Securities Act, right? And filing for that. Now they're filing for Ethereum futures. Is it futures ETF using the opposing act or something like that?
Yeah, so that was me. So basically what happens is like, I'll get into a little difference here, right? So the 33 Act versus 40 Act ETFs, right? The 40 Acts have boards, a little more things, but the reason that you can do it with futures, because technically Treasury securities under U.S. like law and jurisdiction can be considered securities or cash. So basically, by considering them to kind of be securities, it allows them to say that they're a diversified portfolio because they're holding Treasury securities to like as the collateral for those futures products, and they can technically fit as a 40 Act product because then they're more diversified. Or you can just consider them essentially to kind of be cash and then they're not diversified, and then they would go into the 33 Act. There is a little more flexibility in doing things under the 33 Act than 40, but essentially approving Teucrium before Gary Gensler gave that speech, they had already applied under the 33 Act. That's the standard way most futures ETFs are approved. So the SEC had to issue an order after that, and they issued the order in May, right before the Grayscale decision was due in July. So I wrote actually in December of that year, basically like this decision is going to dictate what happens with Grayscale. And in the approval letter for Teucriums, which is now Hashdex, so Hashdex ended up basically taking over that trust that Teucrium managed to get approved under that process. So they have DeFi, the ticker's DeFi. Basically, the SEC spent all this time saying why they're not going to allow spot ETFs, and they were allowing Bitcoin futures ETFs, and it really just didn't make sense to me. I ripped it apart on my notes. I ripped it apart on Twitter, saying it wasn't logical. And ultimately, I was born to be correct because that's essentially what the court said in their decision letter, handing Grayscale a victory. The Grayscale victory was almost completely founded on the approval letter for Teucrium compared to the disapproval letter for Grayscale's trying to convert GBTC. So basically those two processes. The chess comment was definitely me. So I was looking at this, and what happened is we had ARK and VanEck that filed for those Ethereum spot ETFs. And then after that, Grayscale filed for a futures ETF under the 1933 Act in that 19B4 process. And then a couple days later, they filed the same thing for a spot Ethereum ETF. And for a few weeks, I was like, I don't understand why they're doing this. And then it clicked. They're setting up to do the same thing that they did to get the spot ETS. So if Gensler is going to try to push this thing down, kick this can down the road and deny these things again, they're going to force them to issue either approval letter or a denial letter for Ethereum futures ETFs, which they, under this 1933 Act 19B4 process, and basically say, here, give us more ammunition because we'll take you back to court if you're going to approve this thing and then deny our spot application a couple days later. So I don't know if that was fully necessary. My view in this has been since roughly this summer, I've seen a change in the way the SEC is handling things. We have Ethereum futures ETFs under that 1940 Act process I was talking about. I think the SEC has basically decided we're going after the entire crypto space. We're calling almost everything securities, and we already know they consider Bitcoin to be, it's the only one they'll say is a commodity, the only one they'll say is not a security. They refuse to give an answer on Ethereum, but I wrote a note basically saying their actions have implicitly implied that they are accepting Ethereum is not a security. And I think the SEC, even if Gary thinks it might be a security or it is a security, I think he's at the point where like it's just not worth fighting that battle. So I think Ethereum and Bitcoin are kind of getting pushed to one side, and then everything else the SEC is not going to be comfortable with for some time.
So do you think, so that answers my question, but let's just be clear. So you think that you have a Bitcoin and then followed shortly, probably soon after, an Ethereum ETF, spot ETF. And then
so
we may or may not see any other crypto ETF, any other asset, like any other crypto token ETF for some time.
Yes, pretty much. So we've been saying January 10th is our bogey for months now, for an approval for spot Bitcoin ETFs. We can talk down the line about like what possibility could there be that these things don't get approved, but there's definitely a slim possibility. So if we take the base case that those things are approved, we have ARK and VanEck that are due in late May of 2024 for final decision, the same way that ARK and 21 shares are due for final decision on January 10th for Ethereum. So Ethereum, we will have a final decision approval or denial letter in sometime in May. I am not nearly as confident as I was or am about the Bitcoin, the spot Bitcoin. There are differences, right? If they really want to hark on the difference between proof of stake, there's plenty of other things that the SEC could possibly just kind of go after. They could argue that the futures market isn't as stable because they're going to be using the Bitcoin futures market as a surveillance market, and they could argue that like it's not as mature as Bitcoin. Who knows what they're going to? I'm just trying to think of ways they could come up with it. I do think that I think it's more likely than not that they will approve spot ETH because of the things I talked about earlier. I think they have decided they're just not going to fight on Bitcoin and Ethereum, but they're not going to give up on pretty much anything else, right? So that's my base case at this point. And also, you have Grayscale that filed that 19B4 for a Bitcoin futures for an Ethereum futures ETF that's kind of going to back him into a corner again. I don't think Gary wants to go to court. The SEC has taken a beating in the last year in
Yeah, they
court.
have.
Things don't
Yeah,
look great. Coinbase
yeah.
is doing is doing some work on them as well. With the Ripple case, we know Grayscale walloped them. That was a unanimous 3-0 beatdown by the courts for the SEC. That was not a good look for Gary Gensler and the SEC by no means. So I just don't think he wants to go through that again. I don't think it's worth the risk to them. So that's why I've been saying all these things about this. So I think it will be in May or June, May-ish, we could see an approval in an spot, but nowhere near. First of all, that depends on the fact that they ultimately do approve the Bitcoin spot, which obviously, as you know, I think that is going to happen. But again, it's still not as confident as Bitcoin. Bitcoin, Gary, and the SEC have no problem saying this isn't a security, it is a commodity. They will not go there on Ethereum, even though, in my view, they've implicitly accepted it as not being a security.
Let me ask you a question. So we know that Gary, when he was an educator in academia and not in politics, he was quite favorable of crypto. And then, he became chair of SEC, and like it's just like a light switch flipped. I want to ask you a personal question. This is you can answer on behalf of yourself, not on behalf of Bloomberg. What do you think happened to Gary that made him be such the antagonist of the crypto space, which was once a protagonist? He completely flipped, and I wonder if it's like, is he just doing his job, or is there some other conspiracy going on here?
So there's two things here. One, he was political before he was at the SEC. He was running Hillary Clinton's campaign, and he was likely lined up to be Treasury Secretary if Hillary won the presidency in 2016. So he was political before that. And before that, he was working at the CFTC. When he was at the CFTC, one, he worked them extremely hard. He did get them new powers essentially, but he was like a crypto evangelist. Like he went to the
Yeah.
SEC while he was running the CFTC and was very pro crypto. I talked to people who were at the SEC at the time, and he came in like preaching about how great it was. So you saw that if you watch his stuff at MIT, he knows how this stuff works. Honestly, I watched a bunch of his stuff because he was coming in. I was trying to understand how he's going to think about this. I obviously got it wrong. I thought he'd be pro. What I can tell you is likely happened is that Gensler is aligned with the left wing of the Democratic Party, specifically is with Elizabeth Warren. I know people like throw that out there, and like it seems like a meme thing to joke about, but it's serious. What basically happened is I've triangulated this with a bunch of different people. I don't know how strong these sources are, but it's basically what happened was that for Biden to get Elizabeth Warren behind him when she dropped out of the race in 2020, she basically wanted to be able to control like who was running the financial regulatory authorities, whether it's the SEC or FDIC, like all these different things. She's kind of helping like dictate who's running those areas. So he ultimately kind of reports into Elizabeth Warren in a way. And she's very anti-crypto. So even if he doesn't believe some of the stuff he's saying, which I do think look, let's be very clear here. There's a lot of fraud, a lot of manipulation.
Yeah.
People are likely to get hurt and are being hurt by a lot of things happening in crypto. So it's not like Gary's like insane and going off on a limb with some of this stuff. So like that's the one thing I will push back on the crypto community. But I do think like if it were up to him, he probably would have approved these things, but he has political aspirations and he has people that he kind of reports to who don't want this thing to happen. And now they've been backed in the corner. And like I said earlier, you could make an argument that he's playing like 4D chess because we wouldn't even have Bitcoin futures ETFs if he didn't give that speech in August of 2021. And if we don't have Bitcoin futures ETFs, we are likely not here talking about spot ETFs. So maybe he was doing it underhandedly because he might have actually wanted it to occur. Who knows? That's conspiracy tinfoil hat stuff there. But Yeah, that it's more complicated than it seems. And let's be
Yeah.
clear, it's an open secret that he's a political animal and he wants higher office, whether it's Treasury Secretary or something else in the federal government. So he's gotta stay in line.
So let's talk about the recent developments here. And to me, it seems like there's just a lot more action happening, right? Before, when we had these kind of applications and subsequent denials, it was like a lot of just quiet space, right? I mean, months and months and months of nothing happening. And now it seems like you guys are making posts on X every single day, talking about something that's going on. This is a big difference. And we also, one other thing too is that um, I think it was Gary was interviewed, I think was somewhere on Bloomberg or something, and his tone completely changed. He was like, before he was just essentially no comment, or like, this is completely a scam industry. But the last time I think I heard him, or I made a video about it, was he was saying something along the lines of, this Bitcoin spot ETF is going to be treated like a security, and while it's a security, like, and kind of more educating people on how it will work and how it'll be regulated under the SEC versus like just a flat out cold, like, no, don't talk about it. So there's these developments that have been happening very much quicker. And I'm curious, how much is that is changing the, percentage odds that you and Eric are putting toward this approval?
Yeah, so the interview you're talking about is actually with my colleague Kaylee Lyons, and then she
Yeah.
she talks with him somewhat frequently, and we have phone calls and messages back and forth, and I give her like, here, hint at this question and ask it this way, because he's very good at saying a lot of things without actually giving an answer. So we talk on a regular basis, and I'm like joking with her, like, you got to figure out a way to get him to give you something, and we're like trying to read into things he's saying that probably mean nothing. He's just giving offhanded things and talking, so he doesn't actually answer the question. Because basically they can't comment on active applications and active filings until they go live. So like it's very within his power to just not be able to answer anything. But you're right, he has completely changed his tune, and part of it like gave us some confidence, because he wasn't just saying this fraud, but he started saying, I'm a one of five, I'm on a commission with one of five members. He controls the commission because it's him and the two Democrats and the two Republicans, and the two Democrats are almost likely never going to deviate from him. They could in like meetings that are off the record talking like we can't keep doing this, but like they're never going to actually vote against him because that's just not how it works. So there's all these things that he's saying that's kind of like alleviating some of the pressure. My view is that I mentioned the Coinbase SSA. I think he's like, when he approves these, he's going to say, we helped regulate crypto. We brought Coinbase as a surveillance sharing agreement. He's going to say something maybe even about Binance. He's going to spin this politically, right? But as you asked, like this process, typically there's this 19B4 process, there's 4 deadlines, right? You get posted to this Federal Register, and there's these deadlines, and you get 45 days, 45 days, 90 days, 60 days. So the first 3, the SEC could just kick the can down the road, and that's what they do 99% of the time, not even just with Bitcoin ETFs, just with anything under this process. And then the final deadline, they can't delay anymore. They have to deny or approve. With every other ETF filing going over a decade, like you mentioned with the Winklevoss twins, it was delay, 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 deny. Every time, over, and they were not giving anything else. The thing to know here is that to get an ETF approved under these processes, there's a lot of shit that needs to happen, let's be clear, right? But there's 2 main things that you need to focus on. It's one, this 19B4 process, which these deadlines, which is basically a rule change from the exchanges. So technically it's not the issuers filing it, it's the exchanges. Like, basically, we want to change the rules so we can list the spot Bitcoin ETF. That's what it is. The other thing is the S1, or the prospectus, or the offering document. And basically, that's just like, we have to make sure all the risk disclosures are clear. We have to make sure who takes care of things if this error happens or if this issue occurs. This is how the fund is going to operate. These are the fees. Like, these are all the third parties that are going to be interacting with the trust. Like, that all needs to go through a separate division. So 19B4, the first one I mentioned, goes to the division of trading and markets, wonky stuff, but they're worried about fraud, manipulation, all the things that you've been hearing about in these denials. And then the S1 is more worried about risk disclosures and the fundamentals of the documents and making sure that everything is like outlined clearly on how these things are going to operate for anyone who wants to read it. Nobody. I'm like probably one of the only people that actually reads these things because it's my job. But like I said before, the 19B4 process, the division of corporate finance who deals with those S1s never did anything with these things. So basically, we had at the end of September, we had a potential government shutdown, and the SEC went super early on all those delay or those deadlines I was just talking about. And everyone's like, oh, this is it. They're not happening. The SEC is putting the kibosh on this, right? It's not going to happen. And we were like, no, they're doing this early because of the deadline. The
Right.
governments might shut down. They want to get all this work done before, so that it's not just a skeleton crew that has to do all this stuff, right? So that made sense. But also, it was like, well, they went really early on some of these. But after that, we started hearing from issuers rumblings and rumors in the back end, not like issuers directly, but from other people that like anonymous accounts like that we trust are telling us that the SEC is Division of Corp Fin is reaching out, which is that S1 process, which was like, whoa, 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 whoa. They have never done this before. So this is after the grayscale decision. After the grayscale decision is affirmed and the SEC decides not to appeal it, and the S1 and the Division of Corporate Finance starts talking about those S1s.
Let me just clarify. So you said you had anonymous sources reaching out. Most likely, these guys are working for someone either on the issuer side or the applicant side, right? And they're telling you guys that now the division, that's when division is reaching out to the applicants and asking them or trying to get clarity or having discussions. Yeah.
Yeah, they're like giving comments on these filings. So you always have to file an S1 or prospectus, those offering documents. And that Division of Corporate Finance, which handles that, started giving comments like, hey, we're giving comments on this. You need to respond to us. So it's this give and take, right? When you launch an ETF, especially a new type of ETF, there's a lot of going back and forth, as we've seen with the SEC and these issuers. Look, that has never happened before. So that's when we went to 90% in early October. So we were at 75. And then after all those delays, people were like, oh, it's not happening. It's going to go to 0% now from these guys. And we went to 90% because like that Division of Corp Fin has never done this before. This is brand new territory. So that's why we're confident. We got a lot of flack for that. We've since got more and more confirmation. We haven't upped our odds, but it's just things have been continuing to go down that road that we would get approval. So that's why we went out on a limb and we're like, we're upping the odds. We're going here because like this does not happen unless the SEC is getting ready to do something.
Do you have from Bloomberg itself, as part of your roles and responsibilities as a job at a large corporation like that, do you have some sort of guidelines on when you give these percentages, or is it just you and Eric just freely saying like, is that 90% coming from James, yourself, or is that like a more of a conservative kind of corporate assessment? Like if you weren't at Bloomberg anymore, let's say that you left today and then you went out on your own independently, would you still give it 90% odds, or would you say it's higher than that?
So it really is Eric and I. Like initially when we try to do this stuff, it's like, what odds would you need to take like to bet the other side of it, essentially, type of thing. Honestly, when we went to 90, it was probably a little higher than I really wanted to go, but we were trying to figure like, what are we going to go up to, like 10%, 5%? Like who cares at that point? So there's like, it's all qualitative, right? It's not quantitative. It's us like figuring out, like just arguing back and forth both points of like what we think is going to happen next, what we think should happen next, and how these, like knowing like the back ends of how these things operate. So we have a lot of free, like we can do not whatever we want, but we have a lot of freedom to say what we believe and what we think because we're in research, right? If I was in Bloomberg News or some other thing, like I wouldn't be able to be talking like this and making calls and predictions the way that I can. So it's very free and we can do what we want. So my odds probably wouldn't change. I wouldn't make the argument that I'd go lower on percentage at this point. Maybe a couple months ago, I'd say I could see myself going lower. I could maybe go a little higher. But again, there are still risks out there. And I'm also like scarred from like trying to figure these things out. So there was times where I was like, oh, I think there's a 50-50 shot it's going to get approved, and then you got denied. But this is the first time. We went to 75% in August of 21. The Bitcoin futures were going to get launched. So when we went to 75% in August of 23 that the spots were going to get launched, we thought that was a good enough signal, but like people are like, oh, you should be higher. So like we have people on both sides that's like, you're not high enough and like you're way too low and things like that. So but when we went to 90, that was, yeah, and we were at 90%, 95% that the Ethereum futures ETFs were going to get launched too before they did. And still there's always people that are like, no shot, this isn't happening. But they don't understand how things work at the SEC, and they're not talking to the contacts that we have. That's what I feel like a lot of people on Twitter, I guess, don't realize. It's like we're not just like some random people doing this on our own. Like we have a lot of people we know in the industry that we're talking to and trying to understand how this process works. So yeah, I'll just stop there. But I'd say we'd probably be at 90. Yeah.
I'm curious about this, the ad that I recently saw filed with the SEC from Grayscale. I believe there was a discussion between Grayscale and the SEC. I'm not sure how these discussions work, if it's closed door and Grayscale representatives go talk to the SEC face to face. They have some discussions. They come out of that meeting with a little bit more clarity or something. But That is the right order of events, right? Grayscale had a meeting with the SEC. The next day, they filed their an advertisement with the SEC for the Grayscale Bitcoin spot ETF, right?
So it like I'm not. Yeah, I'm actually not sure what ad you're talking about, to be completely honest. So you might know more than I do on this, actually. But like, essentially, the way the conversations work is, there. I will tell you this. Back in 2020 and 2019, there was always talk of like the SEC doesn't understand this stuff. And look, I've been in a couple meetings with them, mostly Zoom at the time, and like the people on the SEC staff understand this stuff as well, if not better, than a lot of these random people on Twitter and YouTube watching these videos, right? They are deep in the weeds on this stuff. It's just it was a decision that was top down, right? It was Gary Gensler's level that was making decisions on these things. But for a while, there was a lot of like collaborative work where the SEC, where these issuers, Bitwise, Grayscale, you name it, were going in and talking with these. Oh, okay, yeah.
Have you
So
seen
there,
this?
yes, I have. I haven't looked at it in detail, but it's basically a presentation. So that's basically what I'm talking about. So it's not uncommon for issuers, particularly to go like when they're trying to launch something, to go in and like give a presentation to the SEC about why they think X, Y, or Z should happen, or why they think this should launch, or how they're planning to do this. BlackRock has done that in this little nuance about whether it's going to be an in-kind create or cash create.
Mm.
But years ago, there was a lot of like back and forth, right, between ETF issuers and the SEC asking detailed questions. And then Gary kind of took over. My understanding is like the conversations were very cold. The SEC wouldn't really ask questions. It would just be the issuers coming in, giving a presentation, and then the SEC asking like one or two very basic things and then leaving. And then since in the last like 5 months, things started picking up a little bit more in these conversations. So it is in person, usually at the SEC, and they're giving presentations. When they give a presentation, the SEC files it under the comments, like under these 19B4s. So you can see all the presentations that were given. Sometimes there's a lot of detail in there. Sometimes there's not much. Bitwise has famously put in like 100-page PowerPoint slides in there, talking about like the differences of underlying exchanges and how a lot of it's fake volume and different things like that. But it's really conversations and meetings that these issuers are having with the SEC and just discussing all the things that the SEC has concerns about. So there was a good period beforehand where the SEC was like, we're just not ready yet, but they were still having conversations. And then there was like this quiet, like Cold War period where like no conversations were really happening. And that has changed in the last few months, from my understanding.
Thing I just saw that recently, in kind versus cash. What does that mean? I tried to understand it before I jumped on here with you, but I just rather you explain it. Yeah.
Honestly, I've had multiple reporters call and like try to get me to explain it, and I'm like, honestly, I don't understand. I'm not that great at it. I'm not really like, I understand how everything works in theory, but like when you get to the mechanics of like who's actually moving this here and there, and there's a lot. If you look at the diagrams from BlackRock's comment, their meeting with the SEC, you can see how much there is in the background. A lot of the people in crypto are like, this is ridiculous. Why are we even doing this? And I'll just point you back to the beginning. This where I was explaining this puts on the traditional financial rails. This is the way things need to operate. I'll just stop there on that front. But essentially what it comes down to is there's the way that I'll explain how ETFs work, actually, if that helps. Like why ETFs are so good. So they were invented in really the early 90s by a guy named Nate Most. And they came from this idea of like commodities warehouses. So a commodities warehouse or commodities warehouse receipts, imagine like you were putting gold in a vault or you're putting grain in a warehouse for a certain period of time. And that warehouse would like, all right, we're going to store it, make sure it's temperature properly or it's secure, whatever. And they give you like a receipt that says you have this much gold, this much grain, this much wheat, whatever in here. And then you could just trade the receipt. That was the whole
Right.
point. So you didn't have to move this stuff back and forth every time you wanted to use it. You were just like, oh, now I have ownership what's in that vault. That was the idea for an ETF, except it was the first ones was for equity and then ultimately for bonds and then eventually gold. But the whole idea is like, oh, here's a recipe of this number of stocks. I hand you the stocks, you hand me the shares of the ETF. When they hand you the shares, they're creating new shares, but they're taking delivery of the underlying asset. That's how a
Right.
Bitcoin ETF theoretically would work, right? Like the market maker or authorized participant, just think like big bank people in Wall Street are going to hand over Bitcoin to the trust, and in return, the trust will create new shares to equate to the amount of Bitcoin that was there. So Bitcoin is always equivalent to there's a certain percentage number of Bitcoin that's equivalent to a certain number of shares. So you're creating shares. So you're always exchanging Bitcoin for shares in an ETF. And when you destroy shares or you have a redemption or an outflow, it's the opposite. You're handing in the shares and taking delivery of the Bitcoin. The
Yeah.
big benefit there is one, those shares can trade in the exchange. You don't have to move the underlying, right? So that's one thing. That's kind of how like crypto exchanges work. Like you're not actually moving on chain usually. You're just
Yeah.
doing it across the platform. That's the way an ETF share would work. The benefit of this is, and the problem with the Grayscale Trust is you can't do that intraday and you can't even redeem at all with the Grayscale Trust. So the benefit of this is one, when you're trading shares for an underlying asset, it's an in-kind transaction. It's not cash for something. You're not buying something, which means it's not taxable. So it's a very tax efficient process. The
Uh-huh.
other benefit is when you always have shares that are equal to a certain amount of the underlying asset, Bitcoin in this case, you're not going to have those premiums and discounts where the underlying value of the Bitcoin held in the trust is $100, but it's only trading at $90 because you can't actually access it. What happens with those creation redemptions is if that gets too out of whack, if the shares get too valuable or the shares get too low, like get our price way too low due to supply and demand, market makers, Wall Street traders, authorized participants, they'll go in and be like, all right, if this is worth too much, I'll hand you that and take the underlying, because there's an arbitrage because those things are always
Yes.
equal. So what happens is the price of the ETF and the underlying asset are always equal. What they're debating right now is a lot of these banks and those people I mentioned technically can't hold Bitcoin. So there's a lot
Right.
of nuance in how they would actually facilitate the creation of shares or redemption of shares. So one way around it is to do what's called a cash creation. They do this for a lot of like the leverage ETFs. If you're familiar with them, there's like 3x Qs and 3x S&P 500, gold miners, you name it, right? So for the most part, you're not actually handing over 3x the securities. It's like you're giving cash and they buy swaps of some
Yeah.
sort or derivatives. Um, this is a known process, but it's still complicated because ultimately the trust needs to get delivery of the underlying spot Bitcoin or they need to buy it themselves. And some of these issuers are not set up properly to like properly go buy and store that, then store this stuff in a cold wallet. So what the SEC seems, what we're hearing is the SEC wants to do that cash process because these brokers aren't allowed to touch Bitcoin. So in a way to do it, they were going to have like subsidiaries that weren't officially banks or brokers, and it gets really complicated. But the SEC likes that cash version because one, no one's touching it, but then it's way more complicated in the back end to facilitate actually like funding the purchase of the Bitcoin or funding the sale of the Bitcoin, because you need to like it needs to happen on like Bitcoin is, it immediately happens. Whereas like in the financial world, usually there's a T+1 or T+2, like it takes a day to settle. So then you have to float money. So like it gets very complicated when you're not just handing the Bitcoin and getting the shares. So a lot of the issuers are like, we want to just do Bitcoin. And the SEC seems to be like, no, if you're going to if you're going to stick to in kind, that's the just handing the Bitcoin back and forth, we're not ready to go. You won't go in the first wave. That's kind of what we're hearing. So
Yeah.
basically, if you're willing to do cash, we'll do it. It seems like BlackRock's trying to do this like hybrid type model, like a little bit of both. Like it should satisfy a lot of the SEC's concerns, but helps us a little bit too. It remains to be seen if the SEC is going to allow that. We're seeing a lot of updates on those S1s I was talking about. What we've heard is the 19B4 process, which is where the SEC talks about like a lot of this facilitation type of stuff. The SEC has asked the issuers to send it privately. So like typically you would publish it and it would get published right on the SEC website. But the SEC has a lot of stuff that ultimately, if you really wanted to see, you could get the FOIA requests in a year or two or whatever. But it's like they want this not public right now, going back and forth on what they're going to do with those 19B4s. So this week we're expecting more S1 updates. They're called amendments. Like it's like the SEC said you need to update this risk disclosure. You need to do this. You need to add more stuff about anti-money laundering, and know your customer and all that stuff, right? And then so we'll see those updates. We think more this week. We've already seen a few. And then we're waiting to see what happens with the 19B4s in the coming weeks, because it sounds like that's going to happen offline, just via emails and things like that, not officially posted on any SEC websites.
I saw something that maybe these S1 amendments are maybe the final drafts. Did I read that right?
Yeah, so I said initially when we were covering this, you can go back and look at my tweets, like we're expecting multiple amendments. Like this is not going to happen just once. There's a lot of stuff that needs to occur. So ironically, Grayscale, because they were an SEC reporting company, which we don't really need to get into, they kind of already had worked with the Division of Corporate Finance. So a lot of their stuff is already like tidier than most of the other issuers I've seen. That said, these issuers, like it's not like this is like proprietary information. Like once one issuer gets the okay from the SEC or seeming okay, like another issuer's lawyer can be like, oh, they got this. This is the language the SEC wants to see.
Yeah.
Honestly, it'd be easier if the SEC just wrote the risk disclosure and was like, here, this is what you need to say. But they kind of just, it's just a back and forth of like, no, you need to be stronger here. You need to give more information on this. You need to disclose this risk more clearly and whatever. That's basically what's happening. I do think this is possibly, if not the final amendment, we're probably getting close. Like there's been a lot of amendments here for to like the stuff that these issuers have put into these documents. So it's not, there's no guarantee that this is the final amendment, but I think we're probably getting close.
So it seems like you guys have made the comment that the official window is somewhere between like January 8th and 10th. Does that mean that you guys think it's highly unlikely that we see an approval this year?
I do now. Yeah. Unfortunately for my colleague, Eric, he has a bet with another ETF analyst at a different firm where he basically said, well, we'll get approvals before the end of the year. Part of the problem is we thought the date for ARK and 21 shares might have moved to December 29th at the time, and it didn't. And it was actually January 10th. But like really the faith of the bet was like, it's going to happen like before the end, like ARK, it's going to be approved, not be denied. But the way that the bet was written up, it's a steak dinner bet. So the other one has to buy the other steak dinner.
I was gonna ask how many Bitcoin Eric lost in
that bet. No, Eric. I don't know if we're actually very restricted from being able to hold that stuff now for the last couple of years.
No way.
Yeah. So yeah, it's just like stocks. You can't cover stocks and hold it. So we're not allowed to really hold it. But yeah.
Can you not hold crypto at all, or can you just not hold Bitcoin?
No, we're very limited. Like we're not allowed. Yeah, basically no, not anymore.
Dude, yeah. I'm sorry, man.
I've had stuff since 2017 that I basically don't touch. But yeah, we're not allowed to. I mean, think about it. I mean, honestly, I thought it was stupid a couple of years ago, but with the last few months, like we tweet things and it's like just insane how much stuff is moving. So it kind of makes sense now. Like at first I was like, this is stupid. I can't even like partake in this stuff in my views. But now it's like, all right, maybe I would be more biased if I might be more biased. But
don't you have massive FOMO?
A little bit, but it's going like there are other things, right? Like I'm getting recognition for this, which is nice. Like
for sure. But
there's been plenty of times in the past where I made calls that other people like kind of just copied and repeated later that had like a bigger following and got way more interest from different people. So now when I make a call, like for the most part, it's getting the recognition, which is very nice. But I guess there's a little bit of it. I think about it a little bit, but I just don't even look at the price anymore. It's just not worth it.
Yeah, I can imagine. So let's talk about inflows and.
Oh wait! I didn't actually answer your question on the dates first. Okay. I forgot.
Yeah.
So yeah. So basically those deadlines happen, and after the second deadline, there's this comment period where nothing can happen on these ETFs. Global X is in one of those comment periods. It's 35 days. It ends December 29th. ARK and not ARK. Hashdex and Franklin had a due date of January 1st, which was a holiday. So basically, if the SEC was going to deny these things, they would have just let it go. You don't move things around to just deny them ultimately, right? So what happened is they weren't due for decision until January 1st. But January 1st is a holiday, and then Global X was due by December 29th. So like if they really want to approve all 12 at once, there was no way to do it with the way those dates lined up. So what ended up happening is they went over a month early on Hashdex and Franklin. So now their comment periods end on January 5th. So ARK and 21 shares, their final deadline is January 10th. Hashdex and Franklin, their comment period, which is a mandatory comment period. I mean, think about it. If some federal agency proposed some rule and didn't leave like room for the public to comment and then like went early, like there would be an uproar. You can't do that. There's no precedent to do that. Some people are like, do they really have to let them leave open the comment period? And it's like, these are here for a reason. Like maybe it doesn't make sense here, but like if you're just like going to allow the SEC to do a rule change and then not allow people to comment because they decide they don't want to, there would be an uproar in some cases. So they're not going to do that. They're not going to set that precedent. So that means January 5th is the end of the comment period for those two ETFs. So that means all 12. Well, now we have Pando, who just entered the race as a 13th ETF issuer, which we could talk about if you want. But like all 12 can ultimately be approved in that window from January. Well, really January 8th, which is that Monday, to January 10th,
Yep.
which is that Wednesday, where if the SEC is indeed going to approve all 12 of these, or potentially 13, I think Pando's probably not in this first wave, but we'll see. Um, that's the window. That's when it can happen. That's when Eric and I could be proven correct in what we've been saying the last few months. Obviously not guaranteed, but yeah, eighth to 10th is the window that I would be looking for, that I personally will be waiting and looking very closely to see what orders come out, because no matter what, they have to issue an order on ARK and 21 shares, and I think they'll also issue orders on everything else.
Let's talk about inflows. So, what do you guys expect? And I know that you lightly touched on it earlier, and that's I watched another interview of yours where you kind of talk about, I think it was, I don't know if it was Galaxy or someone
Yeah, it
who
was
created,
Galaxy.
yeah, who created the kind of expectations of inflows. Um, but obviously these inflows are, I think the Galaxy report was a calculation based on direct impact. And I know that you can't talk about Bitcoin price speculation, but let's just talk about matter of fact. I believe that the Galaxy report was a representation of what would happen directly to the Bitcoin price if their inflow numbers were correct on how that amount of volume would affect the Bitcoin price. But it doesn't include other things. Correct me if I'm wrong, like speculation and retail also catching that ride up. Is that right?
Yeah, so they basically tried to do a bottom-up analysis, like looking at those people I was talking about earlier, the banks. I refer to them brokers and wirehouses and advisors, RAAs. So like these people are the people that tend to use ETFs the most. And then also there's institutions, which I'm not, which are like endowments, pensions. These people, like there are certain restrictions on what they can and cannot invest in, right? So like they can only invest in securities. Bitcoin's not a security. That endowment cannot have, that's what's in the founding principles
Oh,
of that trust or that
interesting.
endowment. They can't hold it. When it's an ETF wrapper, they could. There's no
Yeah.
guarantee that there's anything out there that like would want to do that, but all of a sudden that window is now open for it. And we know for a fact some of those trusts held GBTC and some things like that. So what they try to do is say, all right, what percentage of those people, and those people have, they estimate, Galaxy estimated 40 something trillion in assets. So like what percentage of these different people will ultimately be able to buy this thing in year one, year two, and year three? What percent of those assets will people actually, or those accounts will actually decide that they want exposure to Bitcoin? So you say like, okay, maybe 10% of independent advisors will be able to do this. So the people that will do this early are the people that are like really independent, the smaller shops, the people that have like 2 or 3 advisors, or maybe 4 or 5 advisors, who like don't have to wait for these giant bank compliance offices before they can buy anything, right? So those are the people that could buy early. And you try to figure out, all right, what percentage of those people would theoretically invest in this thing, and what percentage of their client assets would they put in there? So you'd say
Yeah.
1-2% is like, I would probably say somewhere closer to 2%, and I would go lower on the number of people that will actually buy it and could buy it personally. So they estimated 14 billion would come in. I estimate probably, I looked at it a different way. So I love the way they did it, is really good. That's the way I would think about it. And I like to think about, like, look at other ways. So I do comparisons to the Canadian market and the European market. So how they already have crypto and Bitcoin ETFs, and I try to look at like how big are they in that market compared to the total market size, and how big would that mean the U.S. should be? And what most people miss in this is like GBTC is already a $24 billion trust, right? And there's already Bitcoin futures ETFs, there's Ethereum futures ETFs, there's other grayscale trusts. So there's 33 billion here already in the US in these types of traditional, like, ETF like, they're not ETFs obviously, but more, some of them are, exposure. So we estimate like 10 billion could possibly come in on net flows, but you got to realize that, like I mentioned, grayscale is massive. There's a lot of money in there that doesn't really care about their Bitcoin exposure. Like they're there to play the discount, or they were there to play the premium. They're doing special situation type investments. They're not really like long-term buy and hold investors. So there's
Okay.
likely to be some money that's going to come out of that fund as soon as it can convert to an ETF. So there's a lot of nuance here about what it means. But yeah, that the paper was like, we predict this much in assets, and if this much in assets flows in, we think it will have this much impact on the underlying value. I have not done any research like that, so that's just Galaxies, but they estimate 14 in year one. I think I'm probably a little lower than that. But one thing I will say is that gold ETFs, which I talked about earlier. People keep talking like, oh, Bitcoin ETFs are like, I heard some prominent people saying they were going to have like 200 billion in assets in the next 2 years. And the one thing I would say is like, look, gold ETFs have had tremendous success being used as small allocations in portfolios and tactically. Um, they in the US they have 100 billion in assets roughly, right? So like that's probably the ceiling. So I think some of this is way overhyped. I think the bigger impact here in my mind is just the SEC giving the okay. We know that a lot of advisors, one, their preferred method of getting exposure, which I kind of hinted at earlier. We know this from multiple surveys. If they wanted to get exposure, they want to do it through a spot ETF, right? That is
Mhm.
undoubtedly the scenario. So they said they won't do it until there's a spot ETF. And the number one reason why they won't invest, aside from not there no being no spot ETF, is the regulatory uncertainty and the SEC questions concerns about the underlying market. So all of a sudden the SEC signs off on this. It gives a lot more cover for these guys to do this. And not to mention you have the biggest asset managers in the world doing this, right? Like you have BlackRock doing this. Invesco is partnering with Galaxy, Fidelity. I mean, these are multi-trillion dollar asset management firms that are putting their names behind this. So that also is going to help people to do this. But yeah, so our number that I estimated is around 10. Um, Based on just looking at the size of the Canadian market and the European market and trying to triangulate where I think things could settle as a percentage of US ETF assets if we do get this. But the other thing I would say is, look, BITO, the Bitcoin Futures ETF, launched into an absolute mania in October,
Yeah.
November of 2021. And part of the reason why that saw so much inflows is because of what was going on in the underlying asset, right? So
Yeah.
maybe if we saw an ETF launch like tomorrow, because the market's been going crazy from last I checked, it could be crazy initially, but like if things level off and things are trading a little more sideways from at some point when these things ultimately do get approved, and I do think there could be a gap between approval and actual listing, but I think the underlying market will dictate the shorter term flows, right? Like money's if Bitcoin's tanking when this thing right before this thing launches, it's unlikely to be like, oh, these ETFs took in 1 billion in assets, but if it's ripping, it's possible.
So you're in the middle of the kind of financial world, like you go back and forth in Wall Street in New York, things like that. I'm curious, in when you're out at lunch or out for a beer after work or whatever, how much influence do guys like Michael Saylor and obviously Larry Fink have on the perception that other institutions and finance guys, how has that changed? And like, when people look at Michael Saylor, he runs a publicly traded company, and that company's stock is doing better than ever. They're up in insane amounts. I think 2.5 to almost $3 billion right now in profit, and that company is just all around doing phenomenally well. If it's a good chance that company goes to a top 50 company in the world, in the next 4 to 6 years. Other people have to be paying attention to this, right? And I'm curious, like, I don't know if that's been thought about as far as a strategy. People maybe don't have to do that anymore. Michael Saylor was ahead of the game. He gave institutions a way to get exposure to Bitcoin without getting direct exposure to Bitcoin. It was almost as direct as possible, right? When you put your entire balance sheet up and an underlying asset of Bitcoin, it's as close to direct exposure as possible, right? So I'm curious, like, how the tone has changed in your circles and your surroundings, and what the appetite is, because I live in a crypto bubble and my audience does too, right? We're all an echo chamber here, and we're all telling each other how great we are and how great Bitcoin is. But I'm curious what the tone is over there where you're at.
Yeah, so it's funny. Like you said, I go back and forth, and like I find that like I'm on stuff with you guys on this side of the fence, and I'm like kind of a doomer, like, oh, it's not gonna be that much in assets and blah blah blah. And then it's the exact opposite on the other side. I look like you guys to the to them.
Yeah.
But the one thing I would say is there's people that like no matter what happens, they can't look at this objectively. They just hate it. They hate the process. They're against it. I think most people I talk to, honestly, nothing that Sailor has done do they care about. People, particularly, nothing nobody does for, there are a huge chunk of people on that side of the fence that just, they don't care. Nothing is going to get, they hate it. There's nothing, like no matter how good my arguments are for why I think these ETFs are going to happen, there are people that were telling me Bitcoin futures ETFs are not going to launch because of X, Y, and Z. Same with Ethereum futures. They're saying the same thing about spot Bitcoin, and nothing I say or do is going to change their view, even if we continue to be proven correct on our calls. And it's just because they hate the space. right? Like that's just how it is. So there's a lot of people like that on the other side of the fence. The people who are more open-minded, they don't really care about anything Michael Saylor says from my point of view. No one in that world really pays attention to it. Different conversation when you talk about Larry Fink, though.
Yeah.
Larry Fink is a big deal, and him coming on and being pro crypto and pro Bitcoin is getting noticed by different people. But yeah, I will say even within the firm where I'm sitting right now, there's a lot of people even in higher up positions that are very anti the space.
Do you guys have international analysts? Like, is there? I'm curious. Let's say that this approval happens in early January. What's the likelihood? And maybe you know this, maybe you don't. What's the likelihood of Hong Kong coming online next, and then all of a sudden other major jurisdictions, Japan and Korea, and all this kind of stuff?
Great question. So we do. I have a colleague, Rebecca Sin, based in Hong Kong, and she has somebody who works for her, Jack Wang, who covers this space and is covering Hong Kong trying to launch these things. Obviously, from my point of view, and like for most people, like US is the market, particularly for ETFs, really for anything as far as trading goes in capitalist markets. But no, we do have somebody covering that from the ETF point of view. We used to have somebody who was covering crypto directly, but they're no longer at the firm. But yeah, so there is coverage there, like for us, for my team specifically. We expanded within, so from 2021 till now, we've added like 10 people, and most of that was to do more coverage in Europe and more coverage in Asia. And so we do have people covering the space, and she's writing research on the Bloomberg Terminal. She's not active on Twitter, but she is covering this race from Hong Kong.
So what do you think? So what do you think if it's approved in early January that we're going to see this a domino effect to the rest of the world?
Well, the race, I actually thought Hong Kong was going to get through first, based on the stuff that she was saying. So I wouldn't be surprised if that manages to still happen. Potentially, I admittedly have not paid close attention to anything that's going on over there. I'm having a hard time keeping up with everything going on here because this is not my, covering this is not like all I do. Like I have a note now coming out, like looking at like the asset management industry and where things are going with ETFs and mutual funds, passive and active. So I cover like really the traditional financial world and asset management as a whole. And like this is just one niche where like I used to cover commodities and ETFs as an associate. And when I got promoted to analyst, I was just covering ETFs. But like under commodities, I helped bring Mike McGlone up and covering cryptos because I did it in my personal life and I was interested in it back in 2017. And this GBTC and ETHE and these trusts were just perfect overlap for like stuff that I knew and was comfortable with and could explain it to. And there was a lot of clients, particularly private equities and hedge funds, that were interested in playing those premiums and discounts like I was talking about. So I was on the phone with people like that all the time trying to explain what was going on in these markets. Yeah.
All right. I think that's going to be it, James. Appreciate your time. Thanks for coming on. I am very, very excited about this. If anyone's listening in the comments below, if you have any more questions, let us know. And maybe James, we can bring you back on, right before the holidays. I guess that things are going to be pretty quiet during the holidays, and then we can expect a very interesting beginning of the next year.
Yeah, I would say, I honestly, like I said, I mentioned, I think we're going to see a bunch more amendments, and we are expecting to see something happen with those 19B4s in the coming weeks. So there will be a little bit more. Nothing is going to confirm anything. Like I'm waiting. I wouldn't even talk about the 10% why I think it might not happen, but really it just comes down to like if Gary Gensler is going to go nuclear, I could see that potentially happening, right? Like we're 90%, there's a 10% there that we have to leave open, but yeah, ultimately I do think it's going to happen.
Actually, that's actually, you just made me think of two more questions. So let's go a few more minutes if you don't mind. One, and then the last question will be that 10%. But before I get there, I was wondering if you could explain to me the sales process of all the brokers or whatever they're called, the people who are going to be selling these ETFs to their customers, right? So BlackRock has an army of salespeople, just like Fidelity does, and Invesco and everything. And so how do they make money, right? Because this will be a new security class created, a new thing for people to sell to people. How do they make money? And then overall, someone like BlackRock, I'm guessing they don't make money from like a traditional fund style where they're taking a carry fee or success fee on profit, right?
They do.
Do they?
Oh, no, not profit. Sorry. It's just an AUM. It's just a management fee. It's just an AUM fee.
Okay. And how about the sales force? Because there's been a lot of talk about, thousands of salespeople from all these companies just hustling, 12 hours a day, probably doing some things that people and this the what was that movie, Wolf of Wall Streets, Wolf of Wall Street,
Yeah, no, it won't be
probably
like
these
that.
kind of but they're gonna be, people want to make money, right? And this is a new thing they can sell. It's pretty sexy and attractive. How do they make money? And can you paint a picture of what that scenario looks like, of just like all these guys trying to sell the products?
Yeah, so the one thing I would push back a little bit on is that, like, look, no one is really putting like a 20% slug of their client portfolios into this thing, right?
Right.
Like, it's going to be a small portion. So it's going to probably be pitched as that. Like, that's what these issuers are going to pitch it as. That's what they're called wholesalers typically, that try to get other people to buy their products. So that's the way it's going to pitch. It is going to be true, but also you got to realize, like, BlackRock and Fidelity already have like a million advisors that like trust them and use their stuff. And yes, there are wholesalers that are going to be out there, and their bonuses are dependent on like how many, like, kind of like how the selling goes on their front, if they can prove like who bought what. So like it's basically like it's like uh it's not tit for tat, but like if they do a good enough job, they will make more money if they can get clients to buy more of their funds. But like I said, like if you're a wholesaler and you can get somebody to sell the, I don't know, the Spider S&P 500 SPY, the largest ETF in the world, and buy your other ETF, which is cheaper, and move like 50% of your client assets into it, or 40%, that's a way bigger get than like going to somebody getting 2% of the
Yeah.
spot ETF, right? So there, that's the way to kind of think about it, but they are 100% correct. This is going to be one of the things that thousands of those wholesalers are going to be trying to sell, because you have potentially 12 or 13 issuers looking to do this and trying to get in front of these brokers, in front of these compliance departments, answer questions, and get in front of these RAAs and say, hey, look, if you want a small exposure, we have it for you. We can do this. And they're going to competing on fees and competing on what they offer to the clients, helping them answer questions, you name it. So I do. So like, again, like, I think that was being understated initially, and now I kind of feel like it's being overstated, because again, it's
Yeah.
not like they're going to be selling this. It's like going to be like putting in like tens of billions of dollars that they would be doing if they were like managed to get somebody to switch their equity ETF allocation, which is going to be a way bigger proportion of any client's portfolio.
Okay, so let's talk about this.
Oh wait,
The last
the
question.
one
Yeah, go
caveat to
ahead.
what I just said is also the one thing I will say is that these ETFs are going to charge a lot more than those equity ETFs. So the equity ETFs, you can charge like 0.03%, 0.04%. These are probably going to charge 0.5% or more. So
These
well, it'll be
exotics.
interesting to see. So there
Yeah.
is, it might only be 2% of the portfolio, but like there is a bit of a higher fee. Part of that higher fee is that it's going to cost more money to run it, right? So like it's not all just like going to the bottom line, but there's likely going to be some cushion in there for a lot of these
Yeah.
guys.
Yeah. All right. And the elephant in the room, that 10%, what happens then?
Yeah, so initially when we went there, the 10% was that basically Gensler would and the SEC would go nuclear, because the grayscale case we and combined with the S1 conversations, which is, it just didn't make sense for them to be doing, to lose that case and then having these S1 conversations and still manage to deny them. I think it'll be a very hard needle to thread to deny these things. So that was initially like the 10% was like they're just going to blow it up, like they're going to not let it happen, and they're just going to end up in court again, and likely lose again, as far as I'm concerned. But now it's more so like we see all these meetings, we see all these amendments coming through. Everyone's rushing. Like, you got to realize these are a lot of issuers, a lot of lawyers. Like, they're working very hard to get this stuff done and updated instead of the SEC. The SEC is likely working very hard to get this done, right? So one, that's why like I can't, I would be shocked. Like, they wouldn't be spending this much time and money like going over all this stuff, and if these issuers didn't think it was going to happen, and the SEC wouldn't be wasting their time if they weren't planning to ultimately do it. But again, the decision ultimately is way above the staff, the people doing this, most of this work. It's way above their level. So if he
Yeah.
ultimately decides to do it, that could happen. But really, that's kind of less of it now. It's more so like if we get to a point in January where the SEC just isn't ready, there's, rather than having to issue a full denial order from ARK, they could maybe possibly convince ARK and 21 Shares to withdraw, which would say, oh, we withdraw our application. The only way they would do that is they get like some sort of future assurances, like we will be able to go out with the first people that ultimately do get approved. I really don't think that's going to happen, because even like I've mentioned those two processes, 19B4 and S1. The 19B4 is where they would withdraw from. if the SEC really wanted and wasn't ready and wanted to hold up things, they could hold things back with the S1. Once they get the 19B4 approval, it's pretty much done. They just might need to still iron some things out with that S1 process, which means like we could get approval in that window that I talked about, the 8th to the 10th, and we might wait some time before approval, or it could happen literally in a day or two. There's no way to know, but it depends on whether or not those S1s we saw are actually the final amendments, or if the SEC has more things and they're saying like, look, we're not ready to go yet, and they could kind of hold things back using those S1 amendments. But those are the scenarios where I could see us not being correct. Yeah.
Okay, thanks, James. I appreciate you coming on. The time is valuable. Very, very exciting stuff. I'm in your camp, but I think, well, who knows, right? Because there's always that unknown. Like you said, Gary could just go nuclear, and I guess I wouldn't put it past him. But you made so many good arguments today that makes me very, very bullish.
Yeah, the one thing I always said up until like recently was like, honestly, the one thing I'm worried about also in that 10% is something blowing up with the DOJ regarding Binance or possibly even Tether. So now the Binance thing is done for the most part. Now, granted, the SEC was not involved in that settlement. The SEC is still going to do something with Binance. There's a lot of rumors about whether they can do with Tether. My personal view is that like these disclosures, those risk disclosures and those S1s, they're going to say there are risks that Tether might be doing this. They're going to say that like Tether is a risk essentially in disclosure, and that's how the SEC is going to get comfortable with it. Because at the end of the day, anyone buying these things for the most part understands, like if you've been paying attention, that there's a lot of risk in the space. There's a lot of fraud. Like
Yeah.
the SEC's job is not to be a merit regulator, not to say this is a good investment or a safe investment or like this is going to go up. Their job is to be like they're a disclosure regulator, right? Their job is to say disclose all the risks, tell everyone how this is operating. And if you didn't disclose certain risk you knew about, or you didn't operate the way that you said you would, the SEC is going to go after you. And that's what's going to happen here, which I feel like a lot of people who are way higher than 10% on the other side are missing the fact that they're a disclosure regulator. And as long as these issuers are disclosing these things, the SEC wants them to disclose these things. I think that's why we're so strong on and why we're in the 90% camp.
Yeah. Well said. Thank you, James, for coming on. Appreciate your time.
You're welcome. It was wonderful to meet you. Thanks for having me, Kyle.
Cheers. Bye-bye.